Hi, good morning, good afternoon, good evening, everybody, wherever you are. Have a nice time looking at the system that I'm going to be showing you. So this is a system of Bank Nifty of intraday option selling, and we mostly will be having this system in our trade room very soon. So I'm going to be giving you a quick introduction of how the systems work, what are the quick rules of it, and how to trade it. Right. So it's a chart-based system. On the chart, you will get buy and sell signals. The systems that we are using is proprietary system. It is more of volatility based system to find the direction and also safeguard us from violent movements. It has got defined risk. If you see on the top, there is commentary running. At any given point in time, let's assume that there is a signal here of a short. You see this arrow, the shorting arrow, which comes up here on the chart. So if I click on that arrow and assume that it's a running market, so it is telling us that it is giving us a guidance that you will have a risk of 3,500 rupees on this trade if you trade quantity two lots, and your reward is 9,000 rupees, right? And the lines that you see on the top, the bluish green line that you see on the top, aqua line, is basically the stop loss. Above that, if the options price go, you will get an exit signal as well. So it gives you a guidance of how the market is moving, how the price is moving. Um, on the bottom side, you see an oscillator. A green oscillator is bullish, and the red, when it turns red, it tells you that the market is the price is moving down. And we are going to be using these charts. We will have two charts, one on the left hand side, the other one on the right hand side. In fact, we will have four charts, two of call and two of put. So we will have something of this sort, right? So on the right hand side I have plotted put, and on the left hand side I have plotted call, right? So as an example, I am taking an expiry date which is 6th of January. And before showing you the charts, let me quickly take you to the rules. The rule is that it's an intraday system, so you have to start around 9:17. The first trade may come at 9:17, and you have to exit at every day at 3:21. Right. So we are not carrying any position further into the day. Um, and so we have to check the spot price first of Bank Nifty at 9:50, 9:16, whatever it is. Let 1 or 2 minutes pass. Let the first few minutes volatility pass, and then we will see the spot price. And according to that, we will select the call and put, right? For aggressive traders, the call that they can select and trade on is any strike which is between 120 to 180 rupees, and for safe traders can select strike which is below 100, right? So I know that most of the traders who trade expiry and otherwise are are huge volume especially the huge volume traders would be picking the strikes which is below 100. Preferably they would prefer below 50, which is also fine. It all depends upon what your risk profile is. However, we will have strikes or which are priced around 120 to 180, as well as strike which is below 100. So two types, and both for call as well as put, the rules are the same. So we will have a look at it, how to select the strike, how which strikes will be shown on the screen, and how to trade them. Though the system is giving you a guidance on what will be the maximum risk, what will be the maximum reward, the preference here is that you should select a trade or enter into a trade which is giving you at least 1.5 to 2 times reward than of that of risk. This is important, especially on the expiry day, where you get 100% of the reward that you enter at, and the risk is always defined. So in this example, I have defined a risk of 5,000 rupees per trade, right? So if you take a call position, your maximum risk would be 5,000. And if you take a put position, your maximum risk would be 5,000 in it as well. If multiple stops are hit, then if two times call stop hits and two times put stop hits on the same day, which is highly unlikely. However, if that happens, your maximum risk would be 20,000. So that's how the risk and reward is defined in the system. The maximum lot that you can take in the system is 10. Now, this is just from a system perspective. However, as per the total amount and quantity that you trade on, you can do a multiple of it. Like, for example, if you trade 100 lots on the call side, right? If the system says that trade 10 lots and your maximum capacity is 100 lots, then you can trade 100 lots. If the system says trade two lots, then you will have to take 20 lots, right? Because your now multiple is uh, 10 times. So that is how you can position yourself. I will be showing that on the chart. Now, another extremely important is we saw the oscillator on the chart. So probability of success of any trade goes up when that oscillator um, sells off. So this is also a kind of a proprietary oscillator. All the systems that we have created is proprietary. However, you can use any other oscillator as well as per your preference, but that will be on your discretionary. This oscillator that we have created will be on the chart, which gives a proper. So this is kind of back tested and checked properly from the performance perspective, and that's the reason why we decided to put this oscillator. So now, let's go to the chart and check these rules and see how the trades pan out. Before that, let me take you to Bank Nifty. Bank Nifty on 6th January, which is the expiry day, was around, yeah, 3700, 3700, 500. Or let a couple of minutes pass. So if we take a Bank Nifty, the average price is around 37,500 of the first few minutes, right? So this is a 1 minute chart. So 37,300, right? So what I'll do is, on the call side, let me check what is the price, which is, let me go to 9:15 first. So this is 6th January 9:15 on the call side. We will first check all the trades for the entire day on the call side, and we will check all the trades on the put side as well, right? And we will see how many points we are making on this system. So here it is, 37,500 is at 145. So this is a good strike. So if you remember the rule says that we have to pick any strike which is between 120 to 180 for aggressive traders and below 100, right? So right now I'm showing you for the aggressive traders. So 140 is the strike price. So a few minutes pass and it goes to 92, right? So we need to go further down to 37,300 to ensure that we are between 120 to 180. So here it is. On 37,400, we get a sell signal at 122, right? But we need to check the other parameters. What is the first parameter? First parameter is that what is the oscillator saying? Oscillator is saying that yes, you can sell. The second parameter is the risk reward should be at least two times. So if you see this, the stop loss here is very, very far further up. That's the reason why the system is not recommending any trade here, right? So we cannot take any trade, but we need to have this monitored, and we need to see when is the system recommending the first trade. If you see, when the stop loss line goes down, your risk comes down. So there is a possibility that the system starts giving you trade around this point. Yeah. So yeah. Okay. I clicked on the right bar. So this is the bar when the system gave you the first trade, right? So it said that quantity one, risk is 3,250, which is good. Reward, however, is only 1,700. So does that mean that we can take this trade? Not at all. This is not favorable trade. And the oscillator at this stage is also green. Also, the strike price is 70. So let us go further down and identify a strike which is 100 rupees, right? So this is 100. And oscillator is still green. We cannot do anything. And
at this stage, let's see what is the risk reward. The risk reward is 4300 and 40 and 4000, right? So 1:1. Again, no point in taking the trade, and the price is 53. We do nothing. So nearly an hour and a half has passed. We do nothing on the call side. On the call side, I'm saying put side may have generated some trades. We will see that later. Let me go to 37,200, which is at 87. Let me go to 37,100. Yep. So here, if you see, this is a strike which can be traded, right? So which is 4,600 and 7,200, right? So this is a trade that can be traded. However, the risk reward is still below 1.5. So this is something that we can avoid to trade, right? Um, However, let's move further. So I'm going to 30. Sorry, I'm at 37,200. Yeah, 37,200, which is at 100, right? Now let me go further, and at this stage, yeah, okay, this is also not 1.5 times. I'll rather put the times also on the screen. Yeah, this is a stage where your risk reward is favorable. Your price is coming to 115, which is around 120, 180 band that we had selected. Your risk is 4600 and your reward is 12,000, which is good. Now this is a trade that we can take, right? However, your oscillator is still in on the green side, so it is better to avoid and uh, wait for it. And at this stage we get an exit. If you see, you get an exit on all the trades, right? All the strikes. Now, which means that the call side short is not working out in the first 2 hours at least, right? But that does not mean that we should not trade the call side, right? So we move ahead, we see, okay, this is 70, we move further to 37,300. 37,300, you get a short signal here at 97. 97 is an okay price, considering that it's an expiry day. We have already passed nearly 2.5 hour. So going to 120 and 180 is also okay, but let's at this moment take um you know 97 strike, or you could take uh 37,200 as well. However, the market is kind of wild, so I'll rather be a little on a safer side. So I trade this. Let's check the other parameters. What is the risk reward? Yes, it is more than 2. uh what is the oscillator saying? Yes, it turns red here, which means that I can take a trade on this bar, which is at 97, right? And the stop loss is also not near, not far, which means that the risk would be less, which is around 5,000, 4,750. So I enter into this trade, and it is also telling me that you have to take 5 lots, right? So I take 5 lots. So let me add this in an Excel sheet, right? So I am selling it at 91, and also let me put a column called quantity. Sorry, I'm just doing this for the first time, this presentation and webinar. So 5, I right, and we move ahead, and we get an exit signal here, right, which is at 83. So 83, quantity 5. What is the PNL? PNL would be this minus this multiplied by 5. So my uh, and I have to multiply it by 25. So my profit is only $1,000, right? On 5 lot capital. Now the market is going up. We do nothing. We can't do anything. Market is going up. All we have to do is identify the strike, which is around 100 rupees. So this is the strike 37. So we stay here, and we get a sell signal here at 120, which is good. We can take this. What is the risk reward? Risk reward is very good. 4,600 is the risk. Risk will always be around 5,000 rupees. Okay, so that's how it has been coded, and the reward is 24,000, which is really good. Quantity to be traded is 8. Remember that the maximum quantity that can be traded is 10. However, if you see, this oscillator is green, so we have to avoid. We cannot do anything. And it gives a cover signal, so we
got saved from this particular loss. Now let's move ahead. We get another sell signal here at 100, at 180. However, I don't want to take that risk. Let me go to 37,400, which is at 103. Right. Uh, Now, what is the oscillator saying? Oscillator is green. What is the risk reward? Again, it is really good. It is nearly five times, four times, four and a half times. So I take this trade when the oscillator turns red. So this is the point when the oscillator turns red. So I take this trade here. So let's assume that you take a trade on the close of this particular bar, right? Which is at 91. So again, you are trading it at selling it at 91. And what is the quantity? Quantity you have to trade is five. So you have to trade five and move ahead. Now you get an exit. You get an exit here, and you have to exit, right? You have to. You don't have a choice, but you have to exit, and you have to exit at 116.5. So let's assume that you have exited at 117, right? So what is so that's your risk, and you have lost 3,000 rupees in it, right? So what is your total sum? Let me add all of all of it to get us what is the total. So right now you're sitting on a on the call side, you're sitting on a loss of 2,250. No problem. Let's move ahead. And prices shoot up, and you do nothing. 37,400 goes to 285. You do nothing, so you have to move further up, strike. So now you are at 37,600, which is at 97. Okay. Now let's check the parameter. What is the risk reward? 4,200 to 7,300. So this is less than 1.5, right? Um, what is the oscillator saying? Oscillator says that okay, you can definitely sell. So let me go to 37,500 and see the risk reward. Okay, risk reward is again more than 2, and oscillator is red, and you can sell on this bar or on the next bar, which is at 182. So let us assume that we sell 3 lots, which is quantity 3. Your maximum risk is 4,200. So I am shorting 182, 3 lots. Yeah. And let's go ahead. Okay, by the way, this presentation is for the aggressive traders, right? So if I were a non-aggressive trader, I would have, or mildly aggressive trader, I would have shorted 95 instead of 182. So rather, let's do one thing. Let's short at 95. Let's be a little on the safer side. Let's not, even though the risk reward is, so the risk reward on 37,500 is really good. So you could trade this or you could trade this. Since this is expiry, the probability of win could be high, because you can take this entire 7,000 rupees in your pocket if it goes to zero, right? So let's move ahead, and that's what happens. The call prices collapse big time, and at 521 you get a cover signal at point 0.25, right? So I'll exit this at 1. What is the profit? Okay, 7,000 rupees is profit. So on the call side, you get a total profit of 4,800 rupees. Okay. So this ends your call trades. You had only 3 trades, defined stops. Each trade you had a maximum risk of 5,000 rupees. Right? Now let's go to the put trades, right, on the same day, and you'll be doing call and put together. However, just for the presentation, I'm showing you one after the other. Here is 915. 915, like we said, that we have to identify the strikes which are around 100, 100 to 180, 200, or any, if you are an aggressive trader. And this strike, which is 37,300, is at 140. Okay, so this is a fine strike. So I move ahead with this, and let me just kind of check what is 37,200. Okay, 37,200 is better because it is at it is also at 100, above 100, right? So we get a short signal here. Our first short signal came quite early at 942, right? So let's check the other parameters. The other parameters: 47,500, 6450, right? Which is less than 1.5. So let me wait, um, or let me check another strike. Probably this is the strike. Yeah, 37,300. The risk reward is 1 is to 2, and it is telling me to trade only one lot, right? So I could trade this, or I could trade this. Uh, Rather, I would like to trade, be on a safer side and trade 37,300, right? So maximum reward would be 4,400. Uh, so one lot I'll trade at 177, 177, only one lot. Yeah. So it is not a problem. And I get a cover signal here at this stage. Yeah. Which is at 219, 220. So I lose this trade. So what is my total loss? My total loss is 1,000. Am I correct? Yeah. Now this minus this. Yeah. Okay. Yeah. Okay. So this is my total loss. Now I move ahead. Another strike price has crossed 200. I cannot look at this. I have to go to a strike price which is near 100. Okay, this is near 100. So this gives me a sell signal at 84. So I'll rather sell 37,200, which is at 120. Okay, let me check the other parameters. Risk reward is 2 times. The oscillator has gone into red. Quantity is 3. This is perfect. So let me short at 120, 3 quantity. Okay, let's see what happens. And I get a covered signal here at 85, 85. So now my day's profit is 6,300. Right, I go ahead. What is the strike price? 81. I have to go to a strike price which is around 100. So here it is, and I get a sell signal again at 233, which is at 123. Right, what is the risk reward? Excellent. uh, More than 4 times the risk and reward. What is the oscillator saying? Oscillator is saying that okay, just wait for a couple of more bars, and I get a sell on oscillator as well on this bar, right? So at 120, I go and sell again this strike quantity. It is telling me that you have to trade 5 quantity. Okay. Now let's see what happens. And the entire day it collapses, and we get an exit signal at zero point 0.3. So I'll exit at 1. Let's see what is my profit. Okay, this is the profit. So for the day, this is my profit, right? 14,000, 21,225 on one set, right? So um, this is how, the and let us have a look at quickly what Bank Nifty did on that day. Okay, Bank Nifty opened up with a big gap down. It shot down big time, like nearly 300 points. It went down 250 points. It gave a big scare, and then came up again, went flat till this point, and then broke the day's high at 130, 140 approximately after the Europe must have opened, and it went up quite big, right? So the movement of Bank Nifty was quite wild and difficult to trade on that day, both on the call side and the put side. Reason being is that if you went short on the call uh, at the start of the day, you would have your stop losses would have hit. If you were short on put, your stop losses would have hit. Then by the end of the day, your stop loss of the put short would have hit because the market fell another 300 points, right, in the last 1 hour. So it was quite wild, not very easy to trade market. However, in this difficult market, we were able to capture 21,000 rupees on a capital that kind of, you can decide how you'd like to trade on. So I have considered maximum 10 lots on the call side and maximum 10 lots on the put side. Okay. Now, if you see what is the margin that it requires to short, one lot or 10 lots is around 1.2, 1.3. I don't know approximate. I'm just giving an approximate figure. However, if you hedge the positions by buying 1,000 points away options, then you'll get those 10 lots in less than 4 lakh, right? So this trading can be so this system is um, on a capital of probably 7 or 8 lakhs maximum. You can easily trade, and you'll definitely keep getting margin benefits. So I'm not sure. Let me check this. Let me quickly log in into Opstra and check the margins and tell you that as well. Sorry. So if I have to trade 10 lots of a strike, call strike, which is 38,000 call, I sell 10 lots, right? So I have to have 1.3 lakh. However, if I kind of buy 1,000 points away, sorry, 13 lakhs. However, if I buy, so my estimated premium is 4 lakh 17,000, right? So on one side, and at the same time, if I kind of also short 10 lots of put, right? So 17 lakhs, and I have to buy 36,500 put as hedge. So that takes the total margin if you are, at any given point in time, short on call and put both put together, you need a margin of 6 point, so about 7 to 7.5 lakhs, right? So on that margin you are getting, and that this is quite not very aggressive. You're getting 21,000, which is 7 lakh divided, sorry, which is around 3%. 3% on the day on your deployed capital is what you get. So that's about it. I wanted to show you how the expiry day looks like. However, the risk reward on expiry day is very high. Um, Considering the fact that the options would go to zero, system would not give you the similar kind of results. It may be better, it may not be that better. However, the performance would be a little different, and the charts would be a little different on non-expiry days as well. So I will make a video on non-expiry day as well, probably first day of the week, and show you how things work. However, consistently, the system is allowing you to keep the risk always on check, and also ensure that you are always on the right side of the market and you don't get stuck, and you also exit where it is required to be exited, like, right, like for example, if the options are shooting up, so your exit came here quite early, you exit at the stage, and it is saving you from a big loss, right? So that's about it. Thank you. If you have any query, you can ask me on Twitter. My Twitter ID is at the rate soon. Right. So this is my Twitter ID. You can send me queries, or you can send me queries on this Gmail ID as well. Right. All right. That's about it. Have a nice day. Thank you.